you to all that's transpiring in the market and to weigh in on the markets and how should you be strategizing your portfolio. We now have Nilesh Shetty, Portfolio Manager, Quantum Advisors, who's now joining us to weigh in. Hi Nilesh, good afternoon to you and thank you so much for joining us today. Nilesh, Nilesh, we have been stuck in a range for a while now. In fact, FII selling has been a big point of concern because the selling has been relentless. Now, despite the fact that the domestic macros are poised for the next leg of growth, FIIs have been unrelenting. When do we see FIIs make a comeback? And I see that you see a lot of comfort in the large caps. Now remember, FIIs also sell in the large caps. What do you have to say about that? And when can the FIIs make a comeback for India?
Yeah, I mean, a lot of FII allocation tends to be tactical, especially amongst emerging markets. And given the China rally that has played out over the last few months, a lot of them were under allocated there, and perhaps they are selling out to reallocate back to China, which may be driving a lot of outflows from India. But the long-term structured allocators, the pensions and sovereign funds, we've not seen any sort of significant redemptions from that pool. And I think that pool will continue to allocate to India. So once the selling is over, you will see allocation coming back to India. But the interim, because China had such a strong rally and a lot of them were under allocated, you might see outflow. Overall, valuations have become a lot more comfortable. So the correction in India really started in September of 2024, right? That is when we hit a peak. Since then, the markets have slightly declined and the earnings have moved slightly higher. So especially in the larger cap names, valuations are getting more comfortable. And as time progresses and if the market remains where it is, we will see a lot more opportunities open up. But at the moment, the broader market still remains relatively expensive. And we are finding stock-specific opportunities in sectors like pharmaceuticals and logistics. And we continue to have large allocation in financial services and IT services.
Absolutely. Hi, Nilesh. Answering this side, what according to you are the economic catalysts for the market at present, and what will be the next triggers that will drive some momentum in the market going ahead? And also, having said that, a few sectors you did mention which are on your positive focus radar. But apart from that, any sector-specific approaches and also any sectors which you're avoiding?
Yeah, I mean, the problem has been urban consumption, and we've seen that in consumer staple companies over the last 2 years now, where numbers have been very, very weak. And hopefully this good monsoons, which feeds into rural India, but you might have some incidental impact on urban India as well. Interest rate cuts and this cut in GST sort of combines together and pulls up this consumption spend, which has been a drag for the last couple of years. So at least for that that looks like a near-term catalyst for us. In terms of sectors allocation, we continue to have large allocation in banking and financial services. Private sector banks is one of the lowest valuations we've seen in the last 20 years. We have found opportunities in sort of logistics space and a pharmaceutical space, the companies that we added to the portfolio. Consumer staples still remains a no-no, not because we don't like the companies, but because valuations still remain very expensive despite 3 years of underperformance. They still trade at 60 times, 70 times earnings, at least whatever valuation metrics that we apply. It doesn't make sense to us to own these companies. Industrials also, we do not have any allocation to capital goods, purely on valuations again, where valuations are trading even higher than consumer staples in some companies, which again for us, which highly cyclical businesses, not that easy to justify these valuations.
Right. Nilesh, also let me bring your attention to the IT services because I see you have large weights in IT as well. Is it purely on the back of the valuation comfort? Because as far as macro headwinds are concerned, that remain intact. Whether it is in the form of the discretionary spends or the margins, these are still a concern.
Yeah, so discretionary spends tend to be a lot more cyclical, and we've seen that historically every 4-5 years it slows down and then suddenly it picks up. So that we can live with. A lot of the negativity is because of news flow around visas and AI and other things. But when we go and meet these companies on the ground, their business is not materially impacted as of now. There could be some impact of productivity as AI sort of improves and they may require lesser number of employees to do it. But in every technology disruption, Indian IT services, because they come and customize for customers in terms of what their IT needs are, they tend to expand their pool of offerings. So we hope that happens again in the next cycle. But near term, there could be negativity because of news flows emanating from the US, especially on the the visa side, as well as we do not see recovery on the discretionary spend in the near term because of a lot of issues on tariffs and other policies that is coming out of the US.
Absolutely. And Nilesh, thank you so much for giving your time, joining with ET Now and helping us navigate through the market with your fundamental approach on the same. Thanks a lot and have a nice day to you.